Hello, everyone. So today I want to talk a bit about where we stand today after roughly 3 years of running Investiere, and what are some of the learnings that we have from the past financing rounds. Okay, getting there. Exactly. So what is Investiere? And I think this is very crucial because we don't consider ourselves a crowdfunding platform. I think there's a vast, there's quite a diverse set of platforms out there. Some really crowdfunding, so some more related to professional investing. We are not crowdfunding, which can also be seen by the fact that the minimum investment amount on Investiere is 10,000. So that gives kind of a different entry barrier than if you're investing $10, for instance. There are 3 key elements that I want to present. So one, we've been able to accumulate quite an interesting community which has significant financial power. So over the past 3 years, the community has grown to roughly 3,500 people. And asking the investors on the platform to declare what they're willing to invest per year, if you accumulate that, you get to roughly 40 million Swiss francs. And of course, this data has been cleansed a bit, and it might be a bit higher or a bit lower, but just to give you a feeling on that. I think what's also key is, and that's also something that Dave has talked about, you need to have really good investors in order to attract really good startups. And we've been very fortunate to be able to attract quite high value individual investors, both from the startup side, but also industry experts that have been on the board of very big companies, both in Switzerland and in the European Union. And that's key because you're going to have people like that to identify interesting companies, but also to take a lead in a round or to support with the due diligence of a company. Last but not least, and this is what really is a big lever that we have as a community and as a platform, is what we call the Investiere ecosystem. We're building a much broader platform now, enabling startups to get exposure to the community and at the same time allowing the top investors to find interesting stuff before others can. And that gives an interesting insight as well through the platform and through what we call social proof, and which I'm going to talk a little bit about later. Okay. Some numbers so far: we have featured 24 companies. 22 have been successfully financed. I think 2 or 3 have been financed externally, even though they were featured on our platform. And there have been 5 follow-on rounds of some of the earliest companies that we have funded. Some additional figures: so the average investment per person per company is 25,000. The biggest investment so far is 250,000. That's also something we've seen over the past year. There's been a tremendous additional trust, both in the platform and in the selection or the pre-selection of opportunities that have enabled us to attract quite significant investors. Then we also syndicate with other investors, which typically do even larger tickets. And the biggest Investiere contribution has been 750,000 so far. Combining all of the rounds, it's roughly 5 million that we have been able to contribute to businesses, whereas in total 20 million has been invested in those companies. So that includes also the co-investors as well. Thanks. If we look back on where we started in 2010, our role in the round was that of a very small co-investor, and we've been able to be more active in the rounds by also being able to contribute more. And that's a key aspect, to be able to do really interesting deal presentation, because if you want to participate in the discussion about terms, etc., you have to be able to contribute a certain amount, and that we have been able to raise quite a bit over the past years. So enough about what we did so far. I want to talk a little bit about what we've learned. And this relates a lot to what also Dave from Go Beyond has said. So what does it take to do a good investment? So what does it take before the deal, during the deal, but then also after the deal? And I think one key aspect is you have to watch the market. You can't just wait until someone knocks at your door and asks you whether you want to give them money. You have to know what's out there. You have to have a network of people that you can rely on to really see what's interesting. Sometimes this means you have to be also one of the first people to see something, because things can happen fast depending on how well networked the entrepreneurs are. And one important part is as well, you have to sort of monitor things on an ongoing basis, because maybe sometimes something that you see today is not yet quite ready, but then tomorrow it can be quite interesting if certain key milestones are reached, if they can acquire a certain customer, if they reach a milestone technically, etc. And we know that even for bigger investors, for venture capitalists, they struggle with that. You know, they look at a company and they make up their mind and they give a feedback, but they can't look at a company over and over again. That's quite a challenge, and that's something where we can shine as a platform and as a community as well. Then once you want to move into the deal, you have to do it at the right time, because if you're too late and it's already starting to pick up, it can be either expensive or you're not getting in. So that's the timing aspect is really important. And of course, you also have to find the right investors to kind of explain to the entrepreneur why it's the right type of investors that you can bring in. And then after the deal, of course, you have to be able to monitor to some extent what the company actually does. And if you're sitting on the board, that's much more easy. But if you're just an investor wanting to build a portfolio, you can't be on the board of 10 companies at the same time. So that's quite a challenge as well. So what have we learned in those three buckets? I think an interesting one is initially, you know, if you look at applications versus proactive deal sourcing, initially we went out and we had no network, etc. So we just seeked out individual companies and talked to them. So that was very proactive. And then as we moved on, more and more companies were coming towards us. And we thought it was a clever idea to just, you know, let them sort of apply via the platform. The problem with that is that you end up with a huge stack of applications, and actually you're not even close to being able to respond. And that actually is annoying for the entrepreneur. So we're moving a bit more back towards a proactive role, where we say we want to build Investiere in a way that gives value back to the entrepreneur and to the investors, even if we're not featuring around. So it's much bigger, and we've started to do that with the ecosystem, and it's worked quite well so far. So the idea is that we want to give the entrepreneur a way to tap into this community, even without us featuring them. Of course, to a certain limited extent. But if we see that something is really incredibly interesting, we want to proactively go to the entrepreneur and say, there's some additional value and some additional investment we can bring. In terms of the deal, well, one thing we've learned, and this sounds a bit stupid, but people do invest. So when we started, and we said we want to build an online investment platform for something that's very risky, people thought that this was not going to work. And there are quite a number of people who find us via the internet, so not via trusted word of mouth, but via the internet, and that, you know, they take a couple of weeks, but they start to invest. And that's quite an interesting and quite a positive learning, of course. I talked about why timing matters. We're seeing that more and more. Importance of having top investors. There's always a discussion, how important is smart money? Because there's a lot of examples where you have an entrepreneur that says, well, I'm happy if I get money. I know what to do. Just give me the money. And then there's situations where the smartness is quite important. And you have to actually be able to pitch to the entrepreneur and say, look, while it's not every single investor on Investiere was the CEO of, I don't know, Google, there are some people in there that may be very relevant to your industry. And just to get one or two of those will be a big benefit. And that's getting more and more important the more we get into more interesting investment opportunities. Then there's a question of who is the investor. So as opposed to a fund that takes quite a significant fee to manage your money and he's responsible, he goes on the board, we are not doing that because we are doing maybe 10 rounds a year and we cannot sort of accumulate 10 board mandates per year and sort of keep the other ones running. So we are just a platform, we're a community, we're a facilitator, but the investor is actually the investor. So if they invest, it's their decision. If they invest, they also have to, they are in direct contact with the startup. It's not our job going forward to kind of, fix things, keep him informed, etc. And that's something that's quite important to understand as well. What we do is we ensure that a board is well equipped. So we try to contribute valuable people to a board, as an angel club does as well, hoping that those people will take care of the startup or of the investor interest in the startup. Then a question of how standardized does it get? When we started in our first business plan, I think we were planning to do 40 financing rounds a year by something like next year or something. Because we thought, the better we get and the more we learn, we can just, start to really standardize it. But that's something that we've seen is quite difficult. Because every round has its own peculiarities. Sometimes you have old investors and you need to first ensure that. And while we could say we don't care about all of that, just fix it and get to us once you have all of that in place. It's also our reputation of sourcing a deal, facilitating a deal, and we want to make sure that it's done correctly. So there's only a certain level of standardization that we see that can be done at this point. Unless you're going into a very standardized model and you don't care so much about, it's more a transaction business then. And the last point is, of course, fees are a pain. I think in the early stage part, it's always difficult to justify any kind of fees that you take. Also relating back to what Dave said, there's funds taking a very hefty commission. There's angel clubs who take no commission, or sometimes they take coaching fees, or they take annual fees, whatever. We're a for-profit company. We want to be sustainable by being a successful business ourselves. So we do take certain fees, but it's always a pain to discuss them, and it always will be. One additional thing. On the post-deal side, well, the startups are very good at doing what they do, but not about reporting back to investors. So we've seen companies not reporting back for a year, which kind of annoys people if they give you money and then they don't hear back for a year. And that's something that we're going to invest into as well, and how can we make that better? How can we keep this information flowing in a better way? And the last point is, I think when we look out there on the startup financing platforms or investment platforms, it's going to be interesting to see in the long run, how they perform. Because so far we focused extremely on quality, not caring too much on how much we scale on the deal side, but I think it will be a good investment, or we hope it's a good investment in the future, because I could imagine that if in 2-3 years' time, first companies start to fail, or even before that, investors need to get a feeling for, how much risk are they entering really, because it was so easy to invest, and that's gonna give some interesting feedback. That's it. Thank you.
Vielen Dank.